What's up, guys? Welcome to part 2 of my deep dive into the loan estimate. Hopefully, after we interpret this, it'll give you better insight on how to read the loan estimate and how to decipher your hard costs versus your soft costs. So let me open up my pen tool here so we can go over this. All right, I'm just going to go down each part of the loan estimate here. Section A is origination charges. In this case, there is 0. We get a heart for that. Now, sometimes you may have a fat origination charge right here. If you really want to get the rate down, that may be a good thing. You're basically paying your interest in advance through points, okay? But you do want to watch origination charges. If you are paying them, you can usually get a better deal out there, okay? Section B, services you cannot shop for. These are also hard costs. You would not have these costs if you weren't refinancing. I keep mine really simple. I only have 3. You have the credit report, the flood cert, the tax service. Some companies may have a lot here, so you always want to look at that. In section C, services you cannot shop for. These are also hard costs, okay? Check mine out. I have 3 in this case. I've seen some loan estimates where there's 10 fees right here, okay? Just take a look at that. You may want to question why you have so many line items here, okay? Mobile notary fee, $150. Premium for lender's coverage, $395. Settlement or closing fee, $350, okay? Just remember, the left column here, these are all hard costs. Moving on to the right column, we have taxes and other government fees. This is a hard cost. You would not have to pay that if you weren't refinancing. Now, this is where it gets a little bit tricky, and I get this question all the time. Scott, what are my charges in FGHI? Okay? These are usually items that we're paying in advance for you. You would have to pay them anyway, so they shouldn't be figured into your equation when you're figuring out the cost of your loan, okay? For example, in F, you've got your homeowner's insurance premium. We're paying that in advance for you. Prepaid interest. On a refinance, you're always going to have to pay 30 days of interest somewhere. You don't get any free days. So in this case, it's 16 days for $460. In G, the initial escrow payment at closing. What's this? This is for your escrow bank account. You need to form a padded bank account to pay your insurance and your tax in advance. And the mortgage lenders always like extra money in there. If you ever refinance or sell in the future, you will get that extra money back, okay? So right here we have homeowner's insurance, $600. We're collecting for 4 months. Then we have property tax, $766. We're collecting for 5 months, and the total is $38.35. So as you can see here, that's the biggest charge of originating your loan. But you're going to have to pay that anyways. That's for your property tax. So this should not be figured into the equation when you're figuring out how much it costs to close your loan, okay? I, it reviews your total costs. J is very, very important, folks. It's your total closing costs, which consist of soft costs and hard costs. And then if you have a lender credit, it'll be right here. It's really key to look at. You could potentially have a lender credit for $10,000, $20,000, $2,000, some amount that nullifies everything here. So if you're expecting a lender credit, make sure you look at it in section J, okay? So let me get out of this and scroll down a little bit. Calculating cash to close. This section is pretty cool, so you don't have any surprises when you get to the closing table. You want to double check the loan amount, the closing costs, your total payoffs. This is what is owed from your current mortgage lender, and it's right here. Your estimated cash to close, that's really nice to look at here. In this case, the borrower's getting back $52. You can tell right here if it's going to the borrower or from the borrower, okay? If you're expecting not to pay anything, you better look right here. So let's get out of this section, go to page 3. Page 3, in my opinion, is not as important as page 1 and 2, but there are some cool things on page 3. So it gives you a comparison. The total you will have paid in principal, interest, mortgage insurance, and loan costs over 5 years. It gives you the principal you will have paid off. It also gives you the APR. There are different ways to calculate the APR, so I always like looking at the individual line items to see what my actual costs are. I don't always go over the exact APR. It's a good tool, but it's not always accurate in it's not always a true reflection of what your costs are, because there's different ways to calculate it. So in this case, the APR is 2.792. Take a look at that. Interesting factoid is if you have a lender credit, it's oftentimes not allowed to be calculated into the APR calculation. So your APR may show higher than it actually is, okay? Going down, gives a disclaimer about the appraisal. Assumption terms. Is the lender are you allowed to, sell your house to someone else and have them assume the loan? Usually that is not the case. Talks about homeowners insurance. Talks about late payments. Talks about liability if there's a foreclosure. Talks about refinancing. Talks about servicing. So a lot of people always have the question, who's my loan going to be serviced by? You can look at page 3 right here. It says, we intend to service your loan. If so, you will make your payments to us. Right here. Let's go down a little bit more. Really important part, another question I get all the time. The signature line here. You're confirming receipt of your loan estimate. It says, by signing, you are only confirming that you have received this form. You do not have to accept this loan because you have signed or received this form, folks. By issuing these disclosures, the lender is being upfront with you. They want to make sure that you've received them, and that's all that you're signing for. You're signing that you are informed and that you have received them, folks. So don't feel pressured about signing the loan estimate. It's mostly for your information, okay? Thanks for watching. See you next time.